What's up, everyone? Welcome to Send It, the official cryptocurrency podcast of OKX Insights. I am your host today, Olivia, and I'm head of content and comms at OKX. And I'm joined, as always, by my fellow OKX Insights team members. We have Hunain, our senior editor, Maxwell, our senior copy editor, and our more rare joiner. We're really happy today to have Rick, our senior analyst, writer, everything extraordinaire. So thanks, guys, for joining. Today we're going to actually be talking to an internal guest, our very own Lennix Lai, director of OKX. We'll be getting into the markets with Lennix and getting his take as sort of from like the institutional perspective. But before we do that, we just want to have a chat amongst ourselves about what's happening in crypto this week, news, etc. So Maxwell, I'm going to pass the mic to you. I'm going to send it to you to tell us what's happening.
Thank you, Olivia. Do you also say Omicron or do you say Omicron? You're very strong, Olivia, today, yeah?
Oh, I say Omicron, but
Omicron.
I
Well,
also got that wrong for like months. So.
One of the least known Greeks, right? So let's jump into what's happening this week. Obviously, cryptocurrency is always in the news, but I wanted to start with an article I found from CNBC and just kind of see what your guys' take on it. Mainstream media is increasingly covering cryptocurrencies, but I feel like they sometimes, they find the angle in interesting ways. So the headline for the article is Bitcoin donations are pouring into Ukraine as Russia masses troops on the border. Sounds interesting. I clicked on it. Obviously, there's geopolitical events going on in the world right now. But yeah, I sent this to you guys, and you maybe briefly read the article. What do you guys kind of think about this framing of the article and how crypto relates to the Ukraine-Russia tensions?
Okay, well, my first thought is that it's definitely not like important news for the industry. Just a little side note there that you're just sharing it because you want to sort of talk about the approach sometimes that mainstream media takes, right? Like they're obviously looking for clicks, so they're going to include crypto in any way they can, or Bitcoin even more specifically. I think you mentioned before we got on the podcast that the pattern that's being seen here, right, is like not actually backed by the numbers. Like the donations they're talking about are quite small. What was the total?
So there's a few different cryptocurrency donation sites that have been used, but a blockchain research firm called Elliptics made a report, and they said that volunteer groups and NGOs have collectively raised just over $570,000. So, when we're talking about international aid or kind of Western countries sending military aid to Ukraine, I don't think they're dealing in the hundreds of thousands of dollars. They're dealing in the billions of dollars.
Oh yeah, trillions. It's
Yeah.
trillions. Yeah, for sure. The EU sent, I think, $1 trillion in aid to Ukraine. So, I mean, we definitely don't. Yeah, like we're really setting aside. I just want to keep this caveat: setting aside the politics, right? We're not getting into that right now. But like, this is a good example of kind of just a headline for the sake of the headline. It seems like the bigger question is of like, is this a pattern that crypto is used to crowdfund different issues or different, what do we call them? Causes, maybe, not issues.
Yeah.
That's an interesting question. I think historically we have seen Bitcoin used in that way. It is easier in some senses than doing something through a centralized platform.
Just yesterday, the mainstream, not mainstream necessarily, but everyone, I think, is now talking a bit more about crypto just because also, and I think a much bigger story than this, and what we'll get into now, is the recovery of the funds, of the hacked funds from Bitfinex back, a hack from 2016, which is one of the largest hacks. I think it's maybe the fourth or the fifth, maybe. But anyway, the FBI, or sorry, let me fact check myself real quick. I don't think it was the FBI, but it was U.S. investigators, the Department of Justice, have recovered 3.5 billion, which now is equal to. Sorry, let me start over. In 2016, 120,000 Bitcoin were hacked from the platform Bitfinex. In the years since, those wallets have been, moving the funds around, and essentially yesterday, the Department of Justice came out and said that they had recovered 94,000 Bitcoin that are worth 3.5 billion at prices today. So this is a hack from a while ago, and I mean we're coming up on 6 years. And at the time, the price of Bitcoin made that hack about 70 million, something like that. So it also just kind of goes to show how far we've come, 70 million to, 3.5. But this is also the largest seizure of assets in the US government history. So breaking records all the time. Yes. Now, it's a little bit, it's interesting how this has played out. There aren't a lot of details because it's still an active investigation. The US will be prosecuting 2 individuals who they are alleging laundered the money. They are not accusing them, however, yet, as far as we know, of the hack itself. But yeah.
This is the husband and wife pair?
This is a husband and wife. Let's see.
There's some
Ilya Lichtenstein and Heather Morgan. So
okay.
Yeah.
What was?
I think.
Yeah, go ahead.
No, go on.
I just wanted somebody to say who the couple was.
Yeah, it's you can find their videos on Twitter. Crypto Twitter is filled with them, and they're doing things that would probably make the Bitfinex people concerned if these guys can hack them because they look like absolute fools. I'm sorry. Maybe cut this.
Maybe cut this. Opinion.
My personal opinion.
Heather Morgan is an extremely talented rapper, I'll have you know.
I haven't listened to it. But I'm definitely
maybe you should cut this.
You need to listen.
No, you have to look at them. You have to look. It's not. I have. Yeah. Anyhow, so that's one. I think, but the broader point that I wanted to make was that perhaps the media should focus on this as an opportunity where it's 6 years have passed since the incident, but they've still managed to recover the coins, mostly because. And I saw on Twitter, Justin Sun also talked about providing assistance. Then obviously Bitfinex was providing assistance to the Department of Justice. And obviously what kind of assistance can they provide? They can talk about addresses, wallet addresses. They can kind of talk about block any movements from the wallets, or flag those movements, not block them, but flag them if they come to the exchange. And also provide, I guess, related wallets that have perhaps had some patterns of movements between accounts that are suspect. Either way, the point is that it seems that it is much easier to track Bitcoin than fiat or US dollars. I mean, who could have found 6 years later the exact fungible dollars? So That's the thing with Bitcoins. I think the media should focus on their transparency, and it's become really hard to escape that with security firms and data companies and analysis firms. Everyone's got their eyes on the blockchain, and it's just very hard to, nearly impossible, I'd say, to hide those transactions and to hide from that, especially if you want to have any use of the funds. So obviously, because of the on ramps and off ramps, you have to have checks at certain points, which makes it even more secure. And it's just very difficult to use stolen proceeds.
Yeah, just a PSA again for anyone out there. Bitcoin's not good for criminal activities.
That's not at all. Not
Doesn't
at all.
work.
For all the
Doesn't
potential
work.
criminals out there thinking if you want to be a criminal using Bitcoin, Olivia is saying
Just so
probably
you
shouldn't use
know,
Bitcoin.
just use cash. Cash is still king. But yeah, no, it's a really important point because, like generally the mainstream narratives about Bitcoin, cryptocurrency, still cling on to these negative stereotypes. For example, Bitcoin is used only by criminals or whatever, bad actors. And this is a great example of why that, well, first of all, that's just not true, just statistically speaking. And then in addition to that, this is a good example of why that is not true, basically.
Yeah, I definitely I agree with that point, and it is the the beauty of the blockchain is actually that 6 years of investigations can track down these coins again. Just a few other interesting points. 120,000 Bitcoin is roughly equal to the MicroStrategy holdings. So, what do you guys think? Yeah, this is. I mean,
You're like,
MicroStrategy
just
is
a
holding
coincidence.
coincidence? I think not.
Wait, so go ahead. Your point being just
It's a lot. It's a lot of coins. That's
yes.
a fair amount of. I mean, it's less than 1% of the overall supply, but it's still significant. I'm not quite sure. I would need to look this up, but I believe that the U.S. government is going to auction these Bitcoin off. I don't think the government will hold them on the balance sheet. So
As cool
this
as that
could,
would be.
yeah, that would be the biggest news. Is U.S.
I think
ads.
I haven't checked on it since last night. I was looking at it then. I haven't seen it since, but I think that's one thing that people were debating, whether the government is going to return it to Bitfinex or sell them to somebody, because and that's the reason why Bitfinex has their own token as well. It's called Leo or something. That's almost doubled in price. Almost doubled in price. I think not quite as much. I think 80% surge or something. Just because I think somewhere it said that if they receive those coins ever, they're going to use them to buy back and burn their own token. So I think that there's kind of like a lot of different narratives going on, and I'm not sure if there's any clarity on that. Rick, have you seen anything?
I've not seen anything other than what I read last night, which was what you've just said, Hunain. Like the Bitfinex platform said that they would use the funds to buy back the Leo token and burn them. And I didn't check the price, but obviously if that's a rumor going around, then it's expected that the price would pump as people rush in to get tokens before the supply cuts. What I did particularly like about this story is relating back to the difficulties with actually using these funds to do anything. Is that I can't remember which resource I was looking at for this, but somebody was saying that the money had been split many times and gone through different DeFi apps. It'd been wrapped and put onto the Ethereum network. And like one of the purchases that they made was at least one Bored Ape. I just like the image that you hack all this money and the only thing that you can really do with it, because obviously as soon as you get towards a centralized off and on ramp, the inviting KYC checks and whatnot, the only thing you can do with it is buy monkey JPEGs.
I saw somewhere too. Actually, it was some of the funds were deposited into the couple's, the money launderers, like personal accounts, which might have been a flag, and also used to buy NFTs and at least one Walmart gift card. So, steal 3 billion, 120,000 Bitcoin and go shopping at Walmart.
You still need your groceries. Even
Yeah,
with
that's true.
billions of
That's
dollars,
true.
you still need your groceries.
Yes, we still come back to the question: can you buy coffee with Bitcoin? But yeah, no, that's funny. That makes sense. Like, what's the best way to kind of invest in the crypto only world? And yeah, we bought a Bored Ape.
I mean, even if you're using like Tornado Cash or something, there's only a limit of how much you can put through that system.
Yeah.
Because it's the same with the 120 ETH wormhole hack. Like, what can you really do with that? Like, you can attempt to clean it, but maybe in like 100 Bitcoin, 100 ETH at a time, or less Bitcoin at a time, to actually give yourself that cloak of anonymity that Tornado Cash provides. So you're doing like 100 ETH a day or something, or 100 ETH a week. It's going to take you hundreds of years to clean that money. So yeah, just buy high priced JPEGs.
That's a good point too, and it's maybe goes to show why it's taken so long. Like, I mean, 6 years, and also we can be clear, we're not sure that these individuals were the people who hacked, but it does seem like they're the ones who are involved or allegedly involved in the money laundering. So, but in that time, in 6 years, they were only really able to wash about 25,000 of the Bitcoin, which is still a large amount. But interesting hot take I saw on Twitter from Jameson Lopp was his tweet. Imagine sitting on $4 billion in stolen Bitcoin, knowing you're being hunted by nation states, and deciding that New York City is a smart place to hole up. So,
or the cloud was a smart place to store your private key.
yes. What we didn't mention. So, Rick, you want to explain how they actually got?
Well, yeah, from what I understand, the couple had just had their private keys to this wallet that held like, what was it, $4.5 billion, just on like centralized cloud storage, which beggars belief, to be quite honest. We've got an article all about private key security, and it does mention that you shouldn't use centralized storage. It's like rule number one sort of thing.
Yeah, so it was on January 31st, I think the Justice Department got a search warrant for their computer systems, and that's how they were able to get into their cloud accounts. But Rick, that article that you did write that on the wallets, if you came into possession of 120,000 Bitcoin through totally normal means, let's just say legitimate means, how would you protect those funds?
I'm buying that golden Bored Ape, first of all. I'm going to buy...
So before you protect your funds, you need to know,
you're going to buy it.
Buy a golden Bored Ape. I'm going to buy an alien punk. I'm going to put 100 ETH a day through Tornado Cash.
And where would you save your private key? Are you going to memorize it?
Where would I save my private key? I would have it imprinted on a steel plate and buried in my back garden, or buried in the woods or something.
At a very undisclosed location.
People walking around with a metal detector.
Walking around the world.
Yes.
I just write it on a piece of paper and stick it to my fridge.
Nobody would ever know.
No one would know.
There was an interesting, I remember from the article, what was the brain wallet? Do you remember this though? A way of creating your, like a seed phrase.
Mm-hmm.
It's been a while since.
That you can memorize.
Yeah, instead of like the individual, like, like digits and like numerals, you can just come up with a 8-word or 16-word phrase, and you can make your private key
12 word.
12? Uh-huh.
Well, isn't it always, that's always the case? Or what is this? This
Well,
is
you
like
can
a
like
different
generate
seed
it
phrase? Oh, you can make it up yourself.
Yeah.
Yeah, the
from what I
problem
understand.
with that is like a lot of commonly used phrases that might become a brain wallet. They all got I don't want to use the word hacked because it's not really a hack. But
Like
there's
deciphered.
Uncovered,
there's
deciphered.
bots basically trying like the first line out of Beatles songs and stuff like that. You know,
Wow.
like,
Huh.
and I can't remember which exchange did the report, but there was one where a researcher from the exchange had he set up a load of brain wallets with different references from popular culture, and they all got hacked within. Most of them got hacked within like hours, and like the more obscure ones took a couple of weeks. But you know, they all the funds got taken.
Wow. Yeah, that it
Yeah.
makes sense. It's like any password generation, right? Like they can be reverse engineered fairly easily, which is why the random generator is like the best, I guess. I always thought about that though. Just a side note on seed phrases, they're so poetic. It's just like it's amazing. Like it's just a random set of words, and like you could basically, I mean, they're not necessarily inherently poetic, but I always like think of the poetry of them, and you could make up a way to memorize them. You know, people memorize.
That's a much
Yeah.
better way of doing a brain wallet. If
Yeah.
you were to like, you know, if you had to cross a border or something, and you were worried about taking a physical evidence of your seed phrase across the border, you could generate a random one and then incorporate those words into a short phrase that you could remember. And then obviously there's no
Right.
record anywhere in literature or pop culture of this particular phrase that you've come up with, and that's a safer way. But obviously if you forget it, it's game over.
Right. But like,
Olivia,
yeah.
do you want to read us some of your poetry?
Okay.
Yeah.
I haven't actually done it, but I like the idea of making a kind of a story, that you memorize with the words. It just seems so obvious. Like I'm sure there are some little niche projects around this because it's like, I mean, not. I guess maybe there aren't because it's just so sensitive.
Yeah,
but
you
just
don't
that
really
people
want to.
do this definitely. And I just really like the idea, and it always like strikes me as a nice little like almost artistic moment in this really technical process. You know.
Yeah. At one point, I had memorized two of them. Like Olivia said, they become kind of easy at times. I remember some of it. I can say it because the wall is empty now, but I think I don't even remember all of them. But the thing was, I did forget them at one point because I hadn't been using that wallet for a while. I think maybe a month or two. But I had made physical backups just in case. But I wanted to memorize and see how long I would remember it. And you do remember it if you log in, like every, let's say, I'm saying log in, but if you enter your seed phrase every 2 or 3 days, I think that's fine. But you do obviously forget. It's just a human nature, right? I mean, yeah.
Well, yes.
How
It would have to be an active process, right? Like humans have the capacity to memorize so much. Like historically, people needed to remember a lot more than we need to remember now. But even without the need, there's the capacity. Like we still have that capacity if we train our memories. And so it's like it's not necessarily that you need to use it all the time, but if you really, it's not that many words. It's actually not a lot at all. I mean, think about the like texts and poems that people have memorized.
I
I think
wonder
it's not
why
too much.
one of them that I had, I think it had all the things were food names. It was like coffee, cucumber, yogurt,
All of them?
eggplant.
See, this
Yeah.
is
All of them are. That's actually really rare. Like the
Yeah.
odds that
I don't know,
every single
but
word would be related to food.
that's what I'm trying to remember. Maybe I manually chose it. I don't know. But I do remember everything was food. Like I vividly remember coffee, cucumber, yogurt, eggplant. I don't remember the rest of them. But yeah, that was easier to remember.
But I think that's interesting if you kind of like make a system on top of it. If you use popular Beatles lyrics, probably a bot is
bad
going to
idea.
check that because everyone's thinking maybe it could be that. But if you create your own system, like even mathematical, Fibonacci sequence on a dictionary, and then you just say, okay, this is going to be that word, that word, that word, that word. You can make any type of system that you want that isn't a direct, commonly known, commonly easily hacked. And so if you say, okay, I'm going to make my seed phrases easier to remember by doing them all from this book of Catullus poetry translated, and I can choose those words. I don't think the bots are going to be checking that.
Yeah, you just got to be careful. And obviously, don't give away your secrets, Maxwell, what your code is.
Right. I'm just giving some hypotheticals.
Yeah.
But it is interesting that these alleged money launderers just kept their. I don't know if it was in a spreadsheet, but storing it on the cloud.
The DOJ report mentions them decrypting the file. So what that's you can read into that they've actually done some encryption on the file, or you can read into it that the DOJ is possibly not using the word decrypted correctly.
Yeah, it's a good hypothetical question that you brought up, Max, just because it's such an important part of owning crypto. And it's still very problematic. Like we were talking about that recent incident where somebody bought some crypto, had it on a Trezor, the price went up, it became $2 million, and they didn't have the password, they lost the private keys. And then this hardware hacker actually was able to get access to the funds, but it was a huge question if he could, and they did a video about it that was sort of a little documentary, which is cool. But just that's happening now. It's such a common story. And then the solutions to that are either, there's a number of solutions, but if you do want to own your private keys, there's that social concept. What is that called? When you can trust
social engineering.
No.
Okay.
It's instead of just you and your sort of
social recovery.
Social recovery instead of just you and your piece of metal, because that's also scary. There's some options like social recovery that I think will become more common. But anyway, I just it's an active kind of problem of usability in the space, I feel like.
Yeah, I think long strings of numbers, or even randomly generated words, it's a barrier to entry still.
Oh yeah.
And I think as we progress, there will be more intuitive ways that people will be able to connect with their still having their privacy and the security, but having some backup, like the social recoveries, things like that.
Yeah.
Or
one thing
call
that
this guy the hardware hacker. Did he get a bounty from that, by the way? I thought.
Yeah. Well, I'm sure they paid
they
him.
Were No. I mean it was Trezor or Trezor or
Trezor. Oh, from Trezor.
Yeah, because wasn't there a whole thing of no one can hack us. If you can hack us, we'll.
No. The thing was he was using what he did was that I think he had a very old version of Trezor, and in that version, what was happening was that every time the Trezor would update its software, for that time period, it would move the data that it had in the read-only memory to the random access memory, the RAM. And when it moved to the to the RAM, it was decrypted and it was just open text because it was only for a small time. So he simulated that. Yeah.
But the thing is, I'm pretty sure that the point is not when it updated. I think it's just when it turned on or something. There was a moment where the pin would appear in the RAM and he was able to capture that. But it's not. Really? It's because if you updated it, if you update if you update the device, then that's going away because they fixed that. That was a bug.
Yeah. Yeah, I read that he said that what he did was he simulated the update. He made the device believe that it was receiving an update just so that it could put it on the RAM, and then he would read it, I
Okay.
guess. But then Trezor issued a statement saying that this was an older case and now we don't do this anymore. This was
That's what I'm
patched.
saying. Yeah, that's why they probably got around paying a bounty, which is like not really fair because people have older devices, and
Yeah.
that's ridiculous. But yeah, I mean, it took him like 2 months or something. This very experienced hardware hacker to figure out how he could some way access the funds. Like he figured that pin thing out accidentally in the process, which is really interesting. I mean, the point is,
Yeah.
it's really hard. It's really, really hard.
Yeah.
It took the U.S. government 6 years.
One thing I will add though, I'm not sure. Obviously, it's not a controversy, so to speak. But the fact is that a lot of these devices that we use today, for example, the iPhones and the iPads and the Macs, if you recall recently, you start getting a prompt on your phone, especially saying that such and such was copied from such and such. So, for example, if you're using an app, it tells you this whatever text was on the clipboard was copied by that app. So a lot of the stuff that we type or copy or paste is actually copied across these devices using your iCloud account. That means obviously it is moving around these devices and it's in the cloud, the phrases that you copy paste. And since all of us, we don't use an offline internet, an offline computer to do all of these transactions, we all copy and paste, private keys and whatnots across our devices. I do it all the time. I scan QR codes and whatnot. So essentially, if at some point, there was supposed to be a concentrated crackdown on crypto, holdings and whatever not. These tech companies could potentially side with the government and, flag such things. It's fairly easy. If you have access to a clipboard like this and they know what you're copying and pasting, they can easily flag them. Even based on the number of characters and the randomness of the string, they could tell that this
Right.
particular string is a key, and they could just put it aside and, and especially not the same thing. But if you remember, Facebook recently, there was a reveal that they had saved the passwords of people on plain text file in the server. So that's why a lot of times in the past Facebook accounts got hacked, because anybody who hacked them actually just got all the passwords and everything. So obviously tech companies don't practice the best. I'm not sure what Apple do, but I think there's definitely something there. And probably why a lot of the old school security people use offline computers, because they don't trust anybody with this kind of information.
Oh, yeah.
But we obviously don't, and it's very big hassle. So I think you're giving up some of that security for sure. You're trusting somebody in the end.
Yeah, for the convenience. I really love when you can just like copy from your phone and
Yeah,
paste it.
yeah.
Makes my life so much easier.
Yeah.
So yeah, I guess just the final question that I'm kind of curious. What do you think this recovery? Let me start this way. When the hack happened 6 years ago, it had a effect on price. I think it was like a 20%. Plunged 20%. Obviously, didn't stay that low. What do you think this will? How will this play into markets currently? Is this I don't know, a sour note to what's kind of been a good week, or does no one care?
I think we already saw a 6% drop since this news came out. People were kind of very unconcerned about the price dropping. It didn't drop so much yet because there's not a lot of clarity around what's going to happen. A lot of people were speculating that if these coins are returned to Bitfinex, which then returns it to the people who were affected by the hack, they will probably just sell, given the gains that they're seeing, and even if the government auctions them, yeah.
Maybe I need to double check, but I'm pretty sure that the funds the customers were compensated back in 2016 when it was
Bitfinex made people whole with
Whole?
various
Okay.
different. I think so.
with different tokens. Yeah.
I think they had a
Different
haircut, no?
ideas.
Okay.
Well, originally, I think I can't remember what the percentage was, but I read that they haircutted every account, even the ones that weren't hacked. And I think it was either they were left with 30% of their funds or they took 30% of the funds. I think it was the first one. But then they had, again, I can't remember the name of the token, but they released a token shortly afterwards and sort of gave users not just users affected by the haircut, which was every user. They gave them these tokens, which could then be exchanged for equity in Bitfinex. So the users, as far as I know, are all whole. They also refunded them with some of these Leo tokens. So I think that's why there's talk of them doing the buyback and burn with the Leo tokens to sort of give more back to the people who've stuck by Bitfinex over the years.
Yeah, you're right. Makes sense.
Yeah, it was a 36% like across the platform haircut. So
Communism.
it is. Yeah. Well, hey, if it's if Bitfinex now gets that money back or those bitcoins back, that's a nice payday now. So
basically the market wasn't affected except for the Leo token.
Well,
there was a sell-off yesterday, like Unai just said.
That's what you said.
Yeah.
Minus 6%.
But that was also,
like,
I mean, that
now.
could also be, those might be like, intrinsic forces too, for the sell-off. Like there's, because I don't know if, I'm sure that none of the coins that were seized have, entered the market. They're not being sold yet. It'll probably take quite a while. But yeah.
Probably people are a bit nervous about how the government's going to deal with them. I think that's the main concern, right? Because, like, as you said, it's MicroStrategy amount.
Yeah. I'm pretty sure the U.S. government does an auction. So it might just be, a chance for, I think it's for in credit. It's a small group of people that get to bid on discount Bitcoin. So
fun stuff. Very fair.
They should just market sell it all.
Right.
Is that fairer?
Yeah, exactly.
Yeah, I'd rather
one go. Just let's do it.
Well, it's interesting actually if the U.S. I mean, when we talk about governments trying to maybe rein in Bitcoin or do something to affect these, couldn't that actually be the a strategy going on, just to collect and then market sell everything? That would have a drastic effect, I'm sure.
That sounds. You mean like this is all set up just to do that?
No. Okay, I'm not a conspiracy theorist. Tinfoil hat.
That sounds very possible.
The U.S. government were actually the hackers. No, just that instead of going after the miners, for example, a government could purchase $5 billion, $6 billion of the asset, and then just flood the market.
Don't give them ideas. This is like free advice. Yeah, no, I know what you mean hypothetically, obviously.
Yeah, it's not actually what it's going to happen.
Yeah, it would be hard to do that, probably. Like,
yeah. It would also be a lot of money. Yeah, the liquidity and yeah.
Yeah. Also, why do something with money when you can do it with authority, right? I mean, I think that's what governments around the world do. When they can incentivize you to stay home and wear masks, they don't do that. They just tell you to stay home and wear masks. They could just pay you to do it.
Yeah.
They do have to
Many
pay
more people would do it.
Well, at least to be vaccinated, but
yeah.
in some places. But for the most part, no. No, good point. Good point.
Last thing I wanted to bring up, because previously, the day before yesterday, I think Rick and Max did CMD together. and then they
Market
talked
Daily.
about
Daily.
Crypto
Nobody
Market
knows
Daily
it better.
together. Yeah, our daily market update. And they talked about Looks token, and they were talking about how it's doing really bad. I wanted to kind of get an update on that if you guys have any idea of what's happening, and then if we should be looking at it.
Yeah, Rick, you want to explain the what possibly caused the sell-off? I know you did a bit more research than I did for this.
Yeah. So LooksRare token, obviously, it's the token, the native token of Lux token is obviously the native token of the LooksRare platform, which is an NFT marketplace that is trying to rug pull OpenSea by offering cheaper trading fees and also providing an incentive for traders to trade there via staking the Lux token. They can share the profits of the platform, and that's encouraged a lot of wash trading on the platform. And the release schedule for the token, i.e. the staking rewards that they were distributing, were quite aggressive to begin with. I think it was like 1.5 million tokens that were going to be released in the first month. And then today, which is the 9th of February, for those who are listening on Friday or in the week, LooksRare has reduced the rewards considerably. I think they're now paying 60% of the rewards. It's just over 500,000 in Lux tokens. So on the one hand, you've got the new tokens entering the circulating supply reducing, but on the other hand, you've got the incentive to hold and stake Lux reducing. So I believe, and a lot of other people believe who've been watching LooksRare closely, that a lot of people have sold in the run up to this rewards reduction.
Yeah, it's interesting how that the cut in the supply would, in general tokenomics, you would think that would add buying pressure or decrease the selling pressure, but yeah, I don't know. I think it's not new though, right? It wasn't a proposal that just was passed. I believe this was a part of their roadmap. But
Yeah, it's always been understood, but that would happen. But obviously, you've got a lot of Lux being distributed at the beginning, and so people want to take their share of that Lux, and then the game is to dump your rewards and the token before everyone else does. And so that's why I believe we started seeing the sell-off from like the 1st of February, and it's been pretty much down only since.
Yeah, it's hitting new record lows, which record for about a month of trading. It's a pretty new token, but
yeah, it's exactly 1 month. The first period of rewards was 30 days, and the next one I think is 90 days. So I guess the market will wait and see if wash trading is still a viable strategy to increase the amount of ETH rewards received. I mean, it still will increase the amount of ETH received, but whether the total rewards is still hugely profitable like it was in the beginning, which I believe was quite an aggressive bootstrapping mechanism by LooksRare. It's like, look at all the rewards that you get over here. Come and trade here instead of OpenSea, knowing full well that would attract wash traders, which then in turn would attract regular traders who want to stake the Lux token and get involved with the ecosystem and pull the rug out from OpenSea, basically. So I imagine after the rewards reduction, we'll wait a few days to see what the trading activity on LooksRare looks like, and if there's still a large incentive to hold the token, as in the rewards are still highly profitable, then I imagine the price will go back up.
Well, we have this markets conversation with Lennix coming up. Maxwell, you are not able to be on that in that conversation, but you, along with the listeners, can look forward to a kind of a short-term look at what's going on right now. We kind of recapped what we talked about on the last episode with Bitcoin's performance and where we're at. And then we really just dove into some derivatives metrics, not metrics, indicators. So it was really helpful to have Lennix explain kind of like the not the implications, the impact, the importance of looking at things like funding rate, and then maybe the not so importance of looking at things like open interest. Right? Was that the takeaway? Yeah. And kind of sentiment amongst institutional investors, and a little bit of more macro where we're at for this year, what we're looking ahead to. And yeah, it was a good conversation. It's pretty packed.
Yeah. I'm looking forward to it. Lennix is smart, and I want to see it. I'll like and subscribe and share.
Oh
Like
yeah,
everyone else
good.
should too. Yeah.
Very good. Yeah. So let's send it over to our conversation with Lennix. We want to jump into this conversation with you about the markets, Lennix, and obviously, like, your experience is, you work with institutional clients. Could you just like briefly introduce your kind of role at OKX? So you're director, but what does that entail, and what is it sort of like?
Yeah,
What are some
cool.
of the experiences you have? Yeah.
Yeah, cool. My name, I'm Lennix. I'm the director of OKX. So currently, I actually manage the entire institutional space on OKX. So everything that's involved, institutional, crypto fund, hedge funds, institutional business, market makers, traders, proprietary traders, HFT, actually under my coverage. So I actually know and quite familiar with the space of how crypto become getting more institutionalized, and we're actually vividly seeing the trend that crypto is getting more mature because of the penetrations and participation from traditional institutional, especially they're very big and doing really good in traditional market, equity market, and derivative market traditionally, but over the years they spend a lot of efforts and money and people and resources to actually trade or participate in crypto markets.
So thanks for the intro, Lennix. So we, wanted to chat again about the markets this week. On our last episode, we also covered a pretty macro look. Hunain did a really awesome presentation of Bitcoin's price performance historically. It's just kind of on everyone's mind right now. Like everyone's trying to figure out what's going on. So I'm going to pass the mic to you, Hunain, to just sort of set us up for this conversation.
So this is the chart that we were looking at last time we had the podcast about the markets, episode 10, titled "Nothing Goes Up Forever." And if I recall correctly, I think it was around this time, 26th or the 27th, one of these 2 days that it was recorded. It went out on the 29th though. So it was recorded around these 2 days. So the price was here somewhere around 38,000, just above 38,000. And in that podcast episode, we were discussing the typical market structure and how a bottom price formation is formed over time. And we went over a couple of indicators. I will go over them again in a bit. But one thing that I wanted to point out here is that as opposed to, for now at least, as opposed to our expectation that we might see something akin to the May and July formation, we haven't really seen that happening so far. What's been on the charts is similar to the September-October flip, which was between the 20th of September and on the 1st of October when we saw a big candle. This is more of similar to what we're seeing right now. And that's normal because obviously the price doesn't really always follow the same structure, but it has to have a lot of different, you have to kind of focus on a lot of different indicators and see confluence when you want to find a bottom. But that being said, another important thing to highlight here is that the current price surge is not out of the norm for Bitcoin to still trade within a range and revisit these lows. Because if we look at the 19th May drop and we go to the highest point that it was during that range, that was around 41.83%. And if you look at the current range, that is 37, almost 38%. So it's actually gone up higher during the May crash, from the lowest point to the highest point, before it actually came down about, again, came down about 29%. And if we, just for curiosity's sake, if we say we want to come down 29% from there as well, that roughly puts it around 32,000, which is not that bad of a price. So, so the point here is that even though there's been positive price action here, we can't really say that the bottom is confirmed and that we're not going to revisit it again. We probably will revisit it, and the current price action is it's not outside the range of what is normal during a bottom price formation. What is curious, however, and I will go over that now, is the last time we spoke about the coin days destroyed metric from CryptoQuant, and we discussed how every time that metric spikes, the price falls slightly, but then an uptrend initiates. And if it's already in an uptrend, that uptrend continues, and if it's in a downtrend, it flips to an uptrend. At the time this podcast was recorded, there was no spike, but then on the 1st of February, a spike was seen, and it's a big spike, not the kind of which is there when we look at it historically. So this was a fairly big spike, the biggest on the chart. This happened on the 1st of February. So as I explained earlier in the podcast episode, this spike indicates that a number of entities holding coins for a long period of time decided to move them at this point. Now, when they move them, the assumption is that they want to sell them. So that's the only assumption we make here, but the data simply tells us that these coins were moved. And every time they moved like this with a decent spike in the past, the price has continued an uptrend. It has dropped slightly, but then an uptrend has continued. And that happened across the May and July's formation, and also in September and October. And the same thing happened here. On the 1st of Feb, the metric spiked, and then we saw a slight dip from around 38,000 to 36,000. And then an uptrend started to form. So that's that for now. And we also talked about the funding rate last time, and we discussed how on the daily chart, any bottom formation is also accompanied by a negative funding rate. That was the case in the May-July range. That was the case in the September and October range, the end of September range, and we saw that happening here in the recent range as well. And the funding rate was negative on the 31st and on the 2nd of Feb. Speaking of that, last time we also kind of tried to discuss funding rates and what they mean. And since we have Lennix with us today, I think we can send it over to Lennix and get some insights into futures data and what funding rates mean, how they're used, and other futures data metrics that we also mention in Futures Friday, each Friday. Thank you.
Yeah, funding. Thank you. I think it's a very interesting insight. So you can see, the markets actually understand that on-chain data. That's when you move coin to the exchange, people monitor it. Monitor a period before. Previously, if there are large inflow for exchange wallets, that's indicate a bearish sign because they want to sell coin. But right now the data is very, very transparent. So when you see a huge spike on the exchange wallets, I believe it's more likely a bullish signal because somewhere else want to spoof the market. So I don't think it's exactly 100% correlation at the moment right now. And yeah, back to the funding rate questions. So funding rate, I think, is still fairly accurate indicator for the markets to be to view as a market as relatively bullish or bearish in a relatively short period of time, because funding rate is only happens on and only available on heavily traded instruments, perpetual swap. We don't have any other instruments have these kind of mechanism, funding rates. Futures, no, only perpetual swap. And perpetual swaps happen to be one of the mostly heavily traded derivative instruments. It's actually beating volume in terms of our spot and futures. So I think it's a very, very good indicators to take a look on how the market view in a relatively short period of time. So bearish and bullish. So the funding rate in terms of negative positive is fairly simple. When funding rate is positive, the long has to pay the short. It's negative, the short has to pay the long side. So you can essentially think that when the funding rate is positive, that a lot more people are willing to pay more to maintain their long positions. So there's a cost to pay the long position. Why do they need to do that? It's because there are a lot more people to think the market is going to be bullish in a relatively short period of time. So when the funding rate is consistently positive, meaning that the market is more likely to point to your uptrend direction because a lot more people and a lot more position holders that would like to hold long positions and to maintain their long positions despite the fact that they're going to be charged per X hours cycle. So that's good or bad, because when the funding rate is insanely high, there will be incentivized the other side, which is a short position holder, to open even more short positions to earn the funding rate. Because whenever at that particular moment when you maintain a short position, you would get paid. You get paid. And the reward should be is actually very lucrative in time that is in time that when the market is very, very bullish, like 2 years ago when Bitcoin price around 65K. I think the funding rate is talking about annualized return maybe over 80%, 40%, 50%. So by maintaining a short position at the same time that you hash with your spot, you're naturally making annualized return to 50%, 60%, or even 100% annualized return. So you get paid for every 8 hours. So it's incentivize a lot of people to short. So whenever the funding rate, if you think is insanely high, meaning that the market is already over leveraged. So a sharp downturn, a sharp correction should be expected. If you're still holding a long position, I would definitely recommend you downsize and trying to beware of your risk. But right now, I think the market is relatively healthy. The funding rate is not exactly insane. The open interest is getting back, but not that particularly insane as well. So the market right now, I think the uptrend will be continuous for a while.
Right. Thank you. Speaking of the open interest, Lennox, do you think that that has any kind of an impact on a trader's perspective? What kind of a reading can we get from the open interest?
Yeah, open interest normally very consistently correlated with the funding rate, because whenever, back to the example, that when the funding rate is high, that lot high or deeply high or deeply low, that a lot more position holder want to hold the position. For example, long position hash rate spot, a short position and hash rate spot as well. So they would like to, if you think there's a free money, for example, it's a free money, analyze return 30% and 60%. What a logical way to do, or smart money would like to do, is to open as many as position as possible. So in that, when the funding rate is super deviated from the spot market, which is insanely high or insanely low, naturally you see even higher uh, open interest, because people would like to open even more position in derivative markets to make more money on the funding rates. It implies also it implies several things. It implies that the market is either consistently bullish and getting even more bullish, or consistently bearish for a couple of period of time. But there will be always a threshold when the funding rate or the open interest hits somehow historical high or historical high. You should expect a really sharp correction uh, on the other side. If the market is super bearish, super bullish, and there are a lot more positions, everything hitting record high, funding rates, open interest, uh, there will be a sharp correction to trigger a huge amount of liquidations. So market will be getting a lot more volatile. So the indication to the open interest or the funding rate is not exactly the market direction. I think is an indication of the market is getting volatile to change direction.
That's very helpful. Okay, great. So when we talk about longs and shorts, a lot of people I've seen that they question the long short ratio metrics, and they're wondering whether, because every long has a short and vice versa, then how come the ratio can be skewed? Why can we see 1.5s and 2s in that ratio?
Yeah, I think for everyone there will everyone long, there will be everyone short. But right now, all the long short ratio that I calculate outside is actually considered the long position or short position from the top traders, uh, Binance, OKX, FTX. So we only calculate the top trader by definition. For example, like top 100 traders or top 200 traders. So as an indication, we calculated the aggregated position, whether it's long, whether it's short for the top traders, and as a signal to the markets. When there's a lot more top trader holding long position, that might imply something. Implies people or OKX top trader tend to be more bullish, or Binance top trader view tends to be prefer to be a lot more bearish, for example. So but bear in mind that the market is a lot more sophisticated right now. Before, we have a lot of whales, individual whales, manually trading on different kind of derivative platform, and they express their view on open interest. So they normally have a naked long and naked short. So that is relatively believable that the top trader is holding a directional view or either long or short. But right now the market's a lot more sophisticated. Normally, when those kind of institutional normally do not have a naked directional view, they normally hash with some other instruments. So whenever markets, when you see, for example, like OKX have a huge long short ratio in terms of 1.5 or 1.6, maybe they already hedge their OKX position on another platform like FTX or Binance. So in this sense, you can see the Binance short position would have a much bigger proportion compared to OKX, because they actually having a balanced view, a market neutral position, but they hold long position and short position on other platform. So it might not be a necessarily very good indicator for you to determine whether the market will be bearish or bullish. I would rather to determine on funding rates, consistently funding rates, because this will represent an overall market sentiment.
Right. Okay. Thank you. And one more thing I was wondering, since retail sentiment is kind of easier to assess, and there are a lot of tools for it as well, like Fear and Greed Index and whatnot, and you can also look on Twitter. Can you shed some light on what you think is the institutional sentiment right now? Like, what are they thinking? If you can share some information, that'd be curious.
Yeah, institutional. I think one of the indicator for institutional sentiments would be a grayscale funding rate and the premium discount ratio, because or for Grayscale they need to hold like a lockup for six month period. Normally, if they're holder, they need to prepare to lock up their fund for 6 months and more. So if Grayscale is trading at premium, normally you expect that institutional money would be a lot more bullish in that kind of sense. And also, you would take a look of the Bitcoin or Ethereum holding for the listed company from institutional. They will express their view because they only buy and hold at the same time for a couple of period of time. Because institutional money, no, they are not traded. They're not frequently in and out type of trading. So they normally would hold a consistently amount of Bitcoin or Ethereum or crypto for quite a period of time, for long period of time, 6 months or 2 years at least. So that is if they see that they're consistently increasing their allocation to crypto, I think that's already a relatively bullish signal. For trader, you don't need to worry about that. For open interest, for trader, they normally capture the pricing opportunities. That that doesn't necessarily means that they're either bearish or bullish, but they will definitely trade when the market is in sync, or like insanely having an open interest, funding rates, basis is obviously a very good indicator for those kind of speculative trader to turn the market around. So whenever there's insane, the abnormal funding rates, open interest, or abnormal basis, mean the price between futures and spot, you would expect market volatility will come. You expect market tends to have a really sharp corrections or sharp uplift in a relatively short period of time. In those kind of period, what you need to do is to deleverage, to protect your money.
Last question. So do you think Bitcoin will see a new all-time high this year, or do you think it's going to stay in this range and maybe just consolidate?
This year gonna be a relatively tough year, to be frank. I still remains fairly optimistic that Bitcoin would hit all-time high. So breaking 68,000, I think it's fairly easy for Bitcoin. But this year gonna be a very tough year because upcoming we have got a lot of news related to tightening, tempering, and stop tracing. The money stuff, the vision, the overview of the money supply tend to be fairly uncertain. So market need several times of rate hike and tightening to understand and get used to the news that we are going to live in the era that the money supply might not be unlimited, or in that kind of sense, so people it's going to be a lot of tough year, and also there are going to be more regulations related to crypto, and I'm talking about maybe major regulation on Tether, regulation on DeFi, regulation on stablecoin. Those kind of regulatory news tend to be having a really short-term big hit to the market. They will spook the market, obviously, but every time when there's a regulations, markets tend to be after a period of time they understand the news, understand the rules and the regulation. Markets tend to react quite positively because when there's one problem solved, Bitcoin or crypto are getting and adding a little bit more legitimacy, right? So if there's several big concerns like stablecoin, DeFi, or KYC elements, or even Tether got fixed by in terms of regulations, it's actually a bullish market. It's actually a bullish market trend. But yeah, so this year I think it's gonna be a tough year. I mean, it's gonna be super volatile, especially several period of time. But eventually we will see an all-time high, maybe by the end of the year.
Interesting.
Thank you.
Lennix, I'm curious what you've seen in terms of institutional kind of interest over the past year or so, maybe 2 years, like depending on the time frame, because it's interesting what you pointed out about like how institutional investors have different time frames than retail, which makes sense, more long term. But I'm just curious, like what you can share in terms of what clients are looking to invest in and what they've been doing and how it's changed over the past year or so?
Yeah, the past 1.5 year, I think we can call it an institutional years. So before, when we talk about institutional in crypto, like 2 or 3 years ago, we have prop shop, meaning that several group of traders that they quit their job and trade crypto. That's all. That's what we call institutional. But over the years, we see a lot of regulations in place from crypto. That's bad news before when we see regulation, but actually good news to institutional. That's why for the past 1.5 year, due to the fact that Bitcoin or crypto Ethereum get adding a lot more legitimacy from the regulator point of view. So institutional got endorsed by the compliance or internal compliance and their legal team. Hey, we can allocate some capital or team or trading efforts to trade crypto. We can build a new structure, build a new team, build an entity structure just to focus on crypto. And the market got a lot more expertise in terms of trader, technical expert, investment expert, on that feeling a lot more comfortable to and trade crypto professionally in a professional fashion. So that's why from the past 1.5 year from starting the price at Bitcoin around 25,000, we can see a lot more money, new money, big money, directly from the institutional in place, because Bitcoin and Ethereum start to get endorsed by the regulators. They got legal rights, legal status, really clear regulation all over the world that as a legitimate institutional, finally I can buy some Bitcoin. I can allocate, I can maintain my own wallet. I have custodian and safe enough to store my Bitcoin. And those kind of market participants actually attract other type of trader, maybe speculator, market makers, and HFT to put in even more trading efforts and build their own team to trade crypto. And that also boosts up the other market segment. For example, spot, derivatives, and option. Options is a really niche market. You need a really huge futures market in order to have a relatively good option market. So because we have a huge option market, due to the spot market is really good, then we have a pretty good option market right now. So institutional space getting a lot more mature, a lot more market participant, and at the same time exchange improves of clarity, transparency, and also the architecture got a lot more improved. Right now, OKX architecture, Binance architecture, or other exchange architecture actually really compatible in terms of speed, latency, consistency, robustness with traditional stock exchanges. We're not at that fast, but we are very consistent and robust if we compare with stock exchanges. So the institutional starting to feel safe to invest, to trade, to commit resources to trade in crypto. So right now, as a matter of fact, I don't see much differences when you're trading crypto in terms of market participant, when you're trading crypto and versus if you're trading equity, NYS, your Nasdaq market. Similar guys, similar team, similar strategies, similar compliance standard, similar internal control center. The market is very, very mature and sophisticated right now. So we can see that's why we can see the market is a lot more mature over the past 2 years.
So Lennox, obviously, you've talked a lot about Bitcoin and Ethereum.
Yep.
I'm just wondering if you've noticed from your institutional clients if there's appetite outside of those major coins, or do you think the lack of regulatory clarity surrounding like DeFi and possibly even NFTs is currently keeping the institutions away from those markets?
No, I won't say that. So the institutional have different kind of spectrum, right? Some a little bit more frontier institutional already heavily engage and involve in Alcon directly on the protocol level, because some of them has a lot more freedom because compliance has less concern and less constraint to have allocation of frontier token like Alcon, like Bitfinex token, like NFT, like GameFi token. So the old school, much more traditional institutional like pension fund, hedge fund, with a heavy commitment on the traditional market, or at least the company with a heavy requirement on compliance and mandate. Yes, they have to stick and adhere to the regulation like Ethereum, like Bitcoin, because something that's already endorsed by CFTC or the major regulator in the world. But the interest is still the same. They still want to have some kind of indirect approach, at least indirect approach, to participate directly to DeFi, for example. They might be hesitant. They need to be hesitate to directly allocate the capital to stake on different kind of LP or the stake in different kind of DeFi project. They might have a lot of concern because they are not expert in smart contract audits. They're not an expert in terms of a different kind of protocol level. But they're very fairly happy to have a contracting party, a legal entity as a broker to invest for them, to allocate capital for them. So we can see some of the crypto fund, they're actually building their crypto or defined portfolio as a defined tracker or different kind of different kind of contracting party for institutional to indirectly participate in defined area or GameFi area or even NFT area. NFT is even more frontier because NFT, I would say, is an uncharted area for institutional. It's even harder for them to value those kind of collectibles at the moment. NFT for institutional, I think, is a niche market to them. I don't see that specialized institutional just to invest on NFT. Right now, NFT is circulated among heavily involved in memes culture and collectible.
So JP Morgan isn't going to buy my JPEGs then?
Not yet, not quite yet. But I heard some of the crypto lender that's already accept NFT as collateral as collateral borrowing lending. That's already a good stepping stone for institutional to indirectly participate in NFT, meaning that they are sufficiently comfortable in data points of view that I accept NFT as a form of collateral, like Bitcoin or Ethereum or US dollar. It's okay. You can stake your metaverse land in sand, and I can give you some money for that.
Super interesting insights. Any other questions from us? I don't think I don't have any.
Yeah, I think we're fine.
Yeah,
No
this
more
was
questions.
Lennix, is there anything else that you want to just share about your kind of outlook on the market? It can be short term also. We've been sort of getting into macro stuff.
Yeah, I think I won't surprise that market will actually having a short-term correction because we have been up for a few days or even 2 weeks time, and but I think it's a little bit of short-term correction we would likely to see, but I think it's hardly. So March is a very important month, I would say, because the rate hike would be expected, the very first time rate hikes would be expected on that particular month. So people might be a little bit scared, spooked because it's first time, right? But afterwards, maybe second quarter, we will see. We'll expect to see crypto market will become a lot better than before. So my recommendation is still don't speculate by on leverage at this kind of moments, and the market is not exactly bearish right now because people who like to sell, they already sell. I think you can see in terms of funding rate, open interest, exchange wallet balance, I think it's relatively healthy at this point of time. Every single dip, I think, is a buying opportunities on spot, piecemeal buying opportunities on spot. Don't easily add leverage. It's not exactly a good time to add leverage right now. And just wait. People and the market get used to the rate high expectation or tempering expectation. Then the Bitcoin value will actually resume to normal.
I actually just thought of one more question that is unrelated to that because it's super helpful outlook. But unrelated, going back to the conversation about different instruments, I'm just curious, like you mentioned perpetual swaps are the most popular. I imagine that's just their flexibility. Like that's why they have so much volume.
Yeah, correct.
So unlike futures, right? So just what's your take on that? Because it is a unique instrument and not available on a lot of exchanges, and it's specific to crypto, correct?
Correct. I think it's the innovations. There's a huge innovation on crypto, actually. So we don't see any kind of instruments available in traditional markets. The good thing about perpetual is the price is very very similar with spot markets. Unlike futures normally have a deviations with the spot market. So you trade exactly like spot, but at the same time you can add leverage. That is particularly attractive and very very flexible to retail customers. So when retail flow goes and institutional will follows. So that's why we can, and right now, most of the perpetuals are actually settled margin in stablecoin, which actually make the user a lot more easy to understand as well. And it's really fun to trade, very, very easy to understand and easy to trade. On a technical perspective, it's easy to deploy too. So you can see a lot more instruments with a lot more underlying on perpetuals versus futures, because the risk management to the exchange and the technical requirement to launch a futures is a lot more difficult, a lot more hard if you compare with launching perpetual swap. So you can see on OKX alone or even Binance, we have a lot more underlying on perpetual swap as well. So people, if you want to speculate on altcoin or all kind of major altcoin, you will see some kind of perpetual instrument already. So it's fun to trade with, easy, flexible. So that's why it's very successful. I actually recommend the traditional market should follow our crypto innovations.
Awesome. Well, thank you so much, Lennix. This has been really a great conversation.
Cool. Yeah.
Okay, so that's the episode. Thank you very much for listening and watching. As always, please don't forget to like this video if you're on YouTube and subscribe to our channel so that you don't miss the next episode.